Am I audible? Hi everyone, a very good evening to all of you. So we'll be starting with the webinar now. So first of all, a very good evening to all of you. Hope all of you are doing well. So our agenda for today's call is to talk about two of our new fund offerings, Mirae Asset Nifty India Infrastructures and Logistics ETF, and second being a plain vanilla Nifty 500 Healthcare ETF. So over this call, I'll be taking you through the fund presentation of both these funds, and post that we'll be having a short Q&A session. So we'll quickly start with the very first fund, that's infrastructure. Okay. So whenever we talk about any developed economy, whether it be US, China, Europe, or Japan, each of these economies have their own growth model, had a different political system, and have their own political system, right? But what's common across all of them, all of these developed economies have a great infrastructure. So it's very much clear that for any country to grow, it needs to have a very good infra. For instance, US has one of the best expressways. China has one of the best industrial corridors. Japan on the other side has one of the best bullet train network, and Europe on the other side has the best renewable grid network. So it's very much clear that if India wants to transition from a middle income country to a high income country, it needs to have good infra. So over this call, we'll see how infrastructure sector is growing, how it can contribute to the economy, and how does it make sense as an in your investment portfolio. So the very first thing, what is infra, right? I know there are many definitions, but let's try to simplify it. So if I had to define infra, I will divide it into three segments. The first is transportation and logistics bucket, where you have roadways, railways, airlines, shipping companies, and logistics companies. The second segment, the ones which support this infra, like power transmission companies, distribution companies, or telecom companies. And last are the one which support build the infra, which include capital goods, defense companies, cement companies, construction companies, etc. So overall, we can clearly say that infra as a sector is a very broad theme which will cover multiple sectors and subsectors. Now, we have heard this slang that India will grow to a $10 trillion economy, or we will be a developed nation by 2047. But all of us know for the past 2 decades, majority of our growth was led by consumption and services. And in the next decade, if we want to achieve these milestones, we need to have this productive growth. And that productive growth comes from a sector like infrastructure. So let's see how infra can contribute to this growth. So let's divide this into three segments. So the very first stage of building the very first stage is to build the infra, where government will build dedicated freight corridors, build extensive road networks, will build airports. The next stage within this would be to build power and transmission networks, because even if you build the best factory or data centers, it can't run without having excellent power supply. And lastly, you have to build good data connectivity as well, because I believe data connectivity is as important as road connectivity. That's the reason you need to have good telecom networks as well. Once these infrastructure sectors or these pillars are built, the next stage, let's see how does it impact the companies and finally the economy. At a company level, let's say hypothetically, I have to deliver a parcel from Amritsar to Mumbai. It hypothetically takes me 3 days for my parcel to reach Bombay. But if I have a good road infra network, if I have stable power supply, what happens? My same parcel will now get delivered within 1 day. So what am I saving? I'm saving on fuel. I'm using lesser energy sources, lesser power. My delivery time is lesser, and eventually my cost would go lower. As my cost go lower, my profit margins increase. And this will eventually have a positive contribution on my return on capital of the company. So at this level, the firm gains. And now comes at an economy level. So when these companies gain, what does the economy gain? So economy is having better return on capital. We have a positive contribution on the employment side. When infra is created, good amount of service, a good amount of construction job, engineering services jobs are created. We are now able to tap the underpenetrated portion of India, like the tier 3 and beyond cities. And finally, when all these things are set, we'll be having foreign capital that's ready to invest in India. We'll be having more private sector investor. So at a high level, if India has to transition into a developed economy state or even to the $10 trillion mark, infra sector will play as a key catalyst. Now, that was all just facts, right? Let us see what milestones have we achieved. So here we are going to see some of the milestones. For instance, 10 years back, our average rail speed was close to 26 kilometers an hour. Just jump to 2024, we are at 38 kilometers an hour. So we have jumped over there. Similar to the road construction. So India 10 years back used to build around 11 kilometers road per day. Today, we build close to 33 kilometers road network per day. Similar stands for airports. Just see the amount of airports that have increased in the past 10 years. See the capacity utilization that has increased. Initially, even the top six airports used to be running under capacity. But just see the numbers for 2024, they are running over capacity. Look at the port turnaround time. 10 years back, a simple thing used to take 10 days, the port turnaround time. And today, it's at 3 days. So overall, we have achieved many of the milestones, but we have a lot of room to catch up in the coming time. And if we compare ourselves with the global benchmarks, we are doing good, but we still need to catch up, as I said. For instance, US has close to 4,000 airports. India is somewhere around 200. In terms of renewable energy capacity, China has a capacity of 1,900 gigawatt. We are at 170. Similarly, US in terms of data centers hold 50% of the overall capacity. We are still at 3%. But going forward, with good amount of investment, good amount of growth coming in this sector, these numbers may definitely shoot up. Now, we saw what was infra, how it can impact the economy. The question is, how would infra grow? So, the primary force driving infra in any country across the globe is government support. Without government support, infrastructure can't grow. And government, via various policy initiatives, is driving growth in this particular sector. For example, they have the production link incentive schemes, which has a 2.6 trillion outlay focusing on 13 different sectors. Then you have the smart city mission, where government is planning to build 100 smart cities in the next 10 to 20 years. Then you have the Udan scheme, where you can see even the tier 3, tier 4 cities are also now connected to major metros via this regional connectivity scheme known as Udan. Then you have the Sagarmala initiative, where government is enhancing the ports across the nation. They are trying to modernize it and match it with global standard. So overall, we can say via policy, the push is lot. And how has it changed? Let's see via this slide. So, government capex, or let's say policy initiatives, are the thing that are the one thing that you need to track when you see that whether infra is growing or not. So, if we see the central government capex back in 2002 or 2005, infra was a residual expense, but not a national priority. But just see the years post 2015, 2016, or even after 2020, you can see infra is now close to 6.1% of our overall GDP. And similar to that, the central government spending has just increased. But going forward, if we have ambitious plans of becoming a developed nation, this needs to increase more. So, and even this growth is not limited to, like one or two sectors. It is across. For instance, we are growing on renewable energy capacity. We are spending more on ports and shipping. We are growing our railway network. So overall, there is good amount of spending having on each of these subsectors within the infra space. Now, we saw that government capex is also in place, right? What is the next thing that is going to be a key trigger for the infrastructure? That's private capex. So, globally, infrastructure themes follow a simple pattern. First is where you see policy initiatives taking place, that's already done. The second stage, where government will do the spending, we also said that is also in motion. The third stage, where is the one where the private players will see that there is project visibility, there is government spending, and that is the time that they will also start spending. And are there triggers right now? The answer is yes. For example, the corporate debt to GDP ratio shows that the debt of all companies is at a historic low, at a 10-year low, I'll say. And banks are now willing to lend. There is good amount of project visibility. If you see on the lower side, there is good amount of investment that has taken place. And if you see the forecast, it is expected more. And at the same time, you can see companies from different sectors like defense, EPC, manufacturing, EMS space having multi-year order books. So the order book is strong. You see, you have stronger balance sheet, you have lower debt, and at the same time, you have banks which are willing to lend. So this all create a typical environment for more capex spending. And I believe that this is one of the most important triggers in the coming time for the infrastructure sector. And even the same can be seen in numbers. For instance, the infra sector's overall earning has grown. If we see the just past 1 year, it has an expected earning growth of close to 20%. But if we see the next 2 year or 3 year growth, you can see that number is at 27. And again, that is not just limited to a sector like defense or EMS. It is across. Take renewable, reality, utilities. It is across. So overall, there are healthy earnings that are anticipated in the next 4 to 5 years or next 2 to 3 years, you can say. As private capex will trigger, you will see that this will start translating into numbers. But at the same time, we have to see that capex taking place is a long cycle. And that is the reason that takes time to translate into numbers. But if we have to see one number at this point of time, we can see that the anticipated earnings or the estimated earnings for FY28 are in a sweet spot. They are close to 27%. Now we saw that we are at a spot where infrastructure, like the last trigger is left, is the private capex that is going to take place, and we are also waiting for the budget that is going to be announced in this week. The question is, how do you take exposure in this sector? So you have three simple routes. The first route is you go on selecting stocks, but at the same time, you have to remember that infra is a cyclical sector. It is not like non-discretionary. So you will be having up cycle and down cycle. The second route is you take actively managed funds, and the third route is you take passive funds. I'll specifically more emphasize more on passive funds. So these three indices, the Nifty Infrastructure Index, BSE Infra, these are the most popular passive indices that are available in the market. The one on the left, the Nifty India Infrastructure and Logistics, is the one that we have created. Again, it's a first of its kind product that we have developed parallelly with NSE indices. So we believe that infrastructure as a story is not just limited to large caps. For instance, if you compare this to the most popular infrastructure ETF present in the market, mostly you are getting large cap exposure. So we believe that infra story is not just a story that's limited to large caps. You are having an all cap play. That's why we have our portfolio that's close to 60% large cap, 25% mid cap, and 13% small cap. So you have a blend of all companies from all these spaces. At the same time, we have limited these cap stock weights to 5% because if I include a stock like L&T, that will take majority of my weights. So we want that even the players from mid cap and small cap says they also have good amount of contribution. So overall, this particular product gives you an all cap play. You are having 100 stocks, and at the same time, the slide I like to emphasize more, we are very selective on what we choose. So when we talk about infra, there are you'll be finding funds that will be even investing in auto companies or healthcare companies or IT companies. But we are very selective of what we want. So we have limited 8 to 10 sectors that we are targeting, and that approach allows us to play on the specific players rather than the entire. Because once you're over diversifying, you will not be able to capture all the white spaces like you will not be able to capture all these spaces individually, I'll say. If we talk about the performance, infrastructure on a long term basis, 10 years performance, if we see, it has delivered a return of 16%. Compared to If we compare it to Nifty 500, it's at 14.8. 1 year performance has been sluggish. I believe that has been sluggish for the entire market. But again, we have discussed in the previous slides that we have crossed the stage where the capex for government is the policy has crossed, the government policy is in place. Private capex is the one that is yet to play out. So overall, the sector may show promising results, I'll say. And again, you have a portfolio that is diversified across many sub-industries. You'll be finding railway stocks, you'll be finding cement companies, you'll be finding telecom companies, and even logistics companies. So you have a very good diversified play. But again, as I said, we are very specific on what sectors we have chosen. It's completely rules based. We won't be having any bias towards any particular set. And lastly, to sum it up, why do you need to look at infrastructure? So, first thing, policy is there, public capex is running, private capex is yet to take, but we are having companies with multi-year order books, companies that are forecasting better earnings, the a stronger balance sheet narrative is also in place. So overall, in the next like 4 to 5 years, if you are looking for a theme and wanting to play on the infra theme, you can look at it. You have multiple routes, but we suggest a passive route because since it's a cyclical sector, we typically prefer a rule-based approach and a sector-specific approach. And again, if India has to transition from that middle income to the high income nation, services and consumption won't suffice alone. You require infra to play. And it is not just limited to India. It has played for every other developed economy in the world. And finally, it's a passive product, first of its kind product that we have developed with NSE indices. It would be again quite competitive in pricing compared to the actively managed fund or even to the passively managed funds based on the infra thing. So now we'll move to our next fund, that's the healthcare ETF. So I think healthcare as a sector doesn't require any introduction. So I'll start with this thing. Like people may stop buying cars, but they won't stop their medical treatment, right? So healthcare as a sector, it's defensive in nature and the demand is non-discretionary. So if you are looking, and that is a place where the earnings is visible, you are irrespective of the market cycles, you will be having some kind of a classic time COVID. Pharma was the best performing sector in 2020. And if we talk about the healthcare industry in India, the healthcare industry can be broadly segmented into five different baskets. The largest out of them is the pharma space, where we are a large manufacturer of generic drugs, vaccine, even complex formulation. The next, a company like Sun Pharma or Cipla would fit in this space. Then you have hospitals. In terms of hospitals, it comes on the delivery side of the system where you are treating patients that come for some treatment. And even in terms of hospitals, it is the second largest subsegment in the healthcare industry. A company like Fortis or Apollo would fit over here. Then you have the healthcare service provider that support the entire system, like diagnostic labs. A company like Lal Path Labs would come over here. And then you have the medical equipments. I think that's very self-explanatory. And last is the healthcare research analytics, and that is the future-facing part of the healthcare industry, where there is healthcare research, there is healthcare IT, biotechnology, etc. That comes under that bucket. A company like Syngene or Indigene would fit over there. Now, coming to the factors that support the healthcare sector. So, if we talk about our current healthcare expenditure, we spend close to 3.5% of our total GDP on expense on healthcare. If we compare this number to a developed economy like US spends close to 17, UK spends close to 10, and even an emerging economy like Brazil also spends close to 9% on health. So we are quite underpenetrated on that side. If we talk about the doctor density, or even in terms of diagnostic labs, or even the insurance penetration, India is far lower than the global average. Now, this is not a weakness, I'll say. So, this shows that the lower healthcare spend or the doctor density, there is more room for growth, I'll say. So, going forward with rising infra and the supporting demographics that we'll see in the next slide, you can say that healthcare has, as an industry, has lot of scope for growth. One more trend is the like as I said, the demographics. If we look at, so in India as on 2026, there are 11 crore people that are aged above 65, and these are the ones that require the most medical attention. So aging population is also one important factor that may drive the demand for the healthcare sector. And then there is one interesting thing that's taking place, like I'll say in the last 4 to 5 years, it has increased a lot. That is rides of medical tourism. So people from all over the globe, they are now coming to India because treating yourselves in US is far more. You take a flight, treat yourself in India, go back. It's even that's cheaper. So India has a cost competitive edge in like it's cost competitive in terms of healthcare services, and that is going to be one more important trigger factor in the or a tailwind in the coming future. If we talk about the first subsector, that's pharma. So India, like manufactures close to 20% of the generic drugs in the markets. Vaccines, we are among the leaders. We account for close to 60% of the global vaccine supply. And even on the domestic side, we are the third largest market by volume. The healthcare industry, like within healthcare, the pharma space is valued close to 55 billion, and our cost competitive edge with rising geopolitical tensions and countries diversifying away from China. Healthcare as a sector has a good amount of like a good growth story in the coming future. For like estimates say that it's currently at 55, it's expected to grow to 130 billion in the coming future. And again, like pharma sector as a whole has a very good, a very positive contribution on the export sides. So we, as of 2025, we export close to $30 billion of pharma materials to different countries. And name the country, you will see Europe, whether it be Germany, US. You have big trading partners which are importing pharmaceuticals from India. The drug formulations are the major export category. They dominate close to 75% of the entire share. And that's the reason when there were tariffs, you will see healthcare was among the least impacted sectors compared to all others that face that tariff headwind. So India is like the pharmacy of the world, I'll say. And even in terms of exports, it is doing good. So there are expectations that this number is going to double in the next 5 years. Now there is one space that has been like it has been in the buzz for a lot of time is the CDRMO space. Like what is CDRMO? Let's try to simplify it. CDRMO stands for Contract Research Development Manufacturing organization. Now, what does this say? Let's say there is a global company like Pfizer, which is like they'll be developing their own in-house research for drug discovery. But if they do this drug discovery in their own country, the cost is quite higher. So what they'll do, they will move to an emerging economy like China or India, and that's the sweet spot that we are at currently, where countries all over the world are now de-risking from China. They want to establish CRO or CDMO spaces in India. The current market size is quite nascent. It's around $3 billion. But in the next 10 years, their forecast suggests that this thing is going to grow at least 7x. So the CDRMO space is one space that is again poised to do well. Like there is a lot of scope, I'll say. And again, the China plus one strategy might work in our favor. And if I talk about the next important subsegment within the healthcare industry, that's hospitals. Okay, so the hospital market size is close to $76 billion. Out of that, two-thirds of them is controlled by private entities. And again, there are demographic factors that are, we saw factors like medical tourism and aging population that is supporting this hospital sector. And on an aggregate level, if we see, hospitals all across are planning for bed addition. They are going to enhance their capacity. And why is it taking place? Because first is the demographics, second is the insurance penetration that's increasing, and then there is the CGS, the central government scheme, which has also which has also seen a revision recently. So all these factors in aggregate are tailwinds for the hospitals sector, and that's the reason you will see that hospitals are now planning to add bed capacities because they are forecasting demand on like in the coming 4 to 5 years. If I come to the next third big segment, that's healthcare, like medical devices and healthcare research. So within medical devices, you'll be very surprised. Like India still imports a very basic machine like MRI or CT scan machines. The healthcare market size, like the medical devices market size is right now at 12 billion. But as I said, like even they develop their own in-house manufacturing for such basic stuff like a MRI machine or a CT scan machine. There are expectations that this market, the market for medical devices, will grow by 4x in the next 5 years. And the same stands for the diagnostics industry. So post COVID, you have seen that people are now moving towards preventive healthcare. There is more testing awareness. So the diagnostic companies are also now are now getting advantage of these factors. And once these things are set, you will be seeing more foreign investment, and healthcare analytics as a whole is like it's already like booming in the West. It's not long that it starts booming in India as well as people become more and more health conscious. Now, finally, how do you take approach in this healthcare segment? So there are many routes. Again, you have the three routes. You go on individual stocks, you take a passive fund or active fund. So we suggest a passive fund over here. So within healthcare, the index that we have created, again, we have developed this indices parallelly with NSE indices. So this index is based out of Nifty 500, where we'll be selecting top 50 companies out of it. Each stock will have a stock cap of 10%, and there will be semi-annual rebalancing that is take place. And if we talk about the exposure that you're getting, close to 95% of the exposure will be with respect to pharma and hospitals because these are the spaces which are established as of now. If I talk about the other spaces, they are still nascent. But coming time, as there are more and more companies, and you saw a lot of IPOs also taking in this space, this portion may also increase significantly. And within healthcare, why Nifty 500? I like to specifically emphasize on that because we believe that healthcare is again not a story that is just limited to the top pharma companies. We prefer an all cap approach. The current allocation for the portfolio it's 46% large cap, 30% mid, and 22% small cap. So we suggest an all cap approach for the healthcare sector. The exposure that you are getting is fairly similar to other like the other popular indices like the Nifty healthcare or BSE healthcare. But again, we are not just limiting ourselves to the large cap. We have a all cap approach. And again, if you compare it with actively managed fund, you have a exposure that is more or less the same over on that side. If we talk about performance, a decent performance in the like if we talk about the since inception performance, that's from 2005, healthcare sector has delivered 16% CAGR returns from 2005 compared to 12.5% returns of Nifty 500. So you are seeing a 3.5% alpha on that side. In terms of volatility, is where the defensive trades come up. You can see if we compare the volatility since inception volatility, where Nifty 500 on an average has a volatility of 20%, your healthcare is 3% lesser at 17. So you're taking exposure to a sector that is a bit defensive in nature, non the where the demand is a bit non-discretionary. And finally, the portfolio. So the portfolio, as I said, it's created out of Nifty 500. You'll be seeing popular names like Sun Pharma, Divi's Labs. You'll be seeing popular hospital names. Even you'll be seeing Max Healthcare or Aster DM Healthcare. Even there are healthcare research companies like Indegene and Syngene. So overall, you are having a very diversified play in terms of the healthcare, and you are getting all cap approach, I'll say. And finally, to sum it up, why you can look at the healthcare sector. So there are multiple demographic factors, as I said, 11 crore population that is over 65, medical tourism, under penetration versus global peers. Healthcare as a sector has a good story. The demand is non-discretionary. The second point, you are having a port, you are betting on a sector whose traits are a bit defensive. And again, it's an external facing sector. You have a very good amount of export markets. So as I said, 60% of the vaccine supplies, India is the provider. So like you are the pharmacy, like you're betting, like when you bet on India from a farmer point of view, you're betting on pharmacy of the world, I'll say. And finally, since it's a passive fund, so you get a low cost avenue to participate in this sector. So healthcare as a whole, you can like both of these. I'll say if I follow the core satellite approach of investing, both of these themes can be part of your satellite portfolios, and both have their own narratives, like where they are expected to grow. But again, from like even if I speak of infra again, you have good policy support, you have uh, private public capex taking place, private capex also coming time, and within healthcare, as I said, there are factors and tailwinds that will support the medium term and long term growth of this particular sector. So that's all from my side. If there are any questions, you can post it in the chat box. We'll be starting with the Q&A session now. Okay, so there is one question by Arav Mehta, that what is the impact of tariff on healthcare sector? So see, like I'll say at this point of time, there is no sector that is resilient from the tariff point of view. And if I talk about the tariff that has particular taken place, so there is tariff imported, like there is tariff imposed on the branded drugs. So in the branded drugs in India are a very small portion of the overall pharma space. Our majority markets is the generic drugs. So there is no tariff imposed on the generic drugs as of now, but overall the tariff thing remains as a headwind. But as I say, if you compare it with all the other export facing sectors, US has imposed the least amount of tariff on India. And let's say even if the tariff is enforced, so there will be higher manufacturing costs that will hurt the margins of these pharma companies. But as of now, you have only tariff on the branded drugs, and it constitutes a small amount of share on the export side. The next question, what are the benchmarks? So again, both of these schemes are passively managed schemes. One would be replicating the Nifty 500 healthcare index, and second would be replicating the Nifty India infrastructure and logistics ETF. Both are again first of its kind, parallelly developed with uh, NSE indices. So there's one question, is active approach better or passive? What are the pros and cons? See, infra as a, like I'll take this question like from both the funds point of view. So when you talk about infra as a whole, it's a cyclical story, right? There may be up cycles and down cycles, and individually picking stock in such a market cycles where markets have remained choppy in the past 1.5 year. I believe a passive approach would more sense, a rule based approach, because right now betting on individual stocks would be risky. So, in to answer your question for active and passive, I'll say a no to individual shopping, but you can have a mixed blend of one healthcare and a passive infra fund and an active infra fund in your portfolio. But again, if you are comfortable, you're able to time the markets, go for active. But if you want a theme like you're a buy and hold investor for the next 3 to 5 years or 4 to 5 years, you can look at the passive fund. Which NFO is best, healthcare or infra and logistics ETF? So see again, both are very different in their traits. One is a sectoral which follows a bit defensive in nature, non-discretionary, I'll say. The second is more of a thematic product. So for thematic invest, we do suggest 5 years investment horizon. And again, infra as a theme, as I told, there are multiple tailwinds supporting this particular sector. The one factor that needs to be watched out in the near term would be the budget and the private capex that takes place. Okay. So there's one question, what will you suggest for retail and bulk investor investing in SIPs or bulk investments? So at this point of time, what you can do, you can simply have a staggered approach. I won't say that pull in all your money right now in infrastructure. There's again one key factor that needs to be observed for infra is I'll say for both sectors, the budgetary allocation that takes place. But in terms of if you're betting for from a longer term perspective, from a 4 to 5 year perspective, you can use the staggered approach that would make more sense at this point of time. uh, there is one more question. Is there any advantage to pharma sector due to India EU trade agreements? See, the European region is the second largest partner after US when we are talking from a healthcare point of view. So yes, like have not gone through the entire restrictions or the tariffs that have been reduced or increased, but again, it should have a positive impact as European region still remains a very big trading partner of ours in compared to when we talk about exports. Okay. There's one question by Dinesh. How will this funds be placed in comparison to popular actively managed funds? So see, when we talk about actively, if I compare the performance of actively managed healthcare funds versus the passively managed benchmark, I'll say because there's no actual performance. So on a 3 years basis, the index is outperforming close to 80% of the healthcare funds. Again, that's on regular plan basis. And if I compare the performance versus the infra side, that's around 60% for the regular plan. Okay, so there's one question by Santan on like since the funds covers various sectors supposed to get invest return over 7 to 10 years. So see, as I said, now this particular fund is part of your satellite portfolio. So you are looking to like if you are under exposed to the infra sector, you can bet on it. Again, it's infra as a cycle. It's a long cycle. Like typically the average cycle for infra, the public capex or private capex to take place, that is around 4 5 years minimum. So yes, it's from a longer point of view to like if you are expecting higher returns from that side. Okay. So what will be so there's one question by Shaju. What will be the strategy to minimize impact of downtrends? So as I said, the one of the best approach to go on any of the thematic investments or a sectoral bets is to like I'll say specific about thematics is to take a staggered approach Within sectorals, if you believe that you can take a tactical call, for instance, metals was one space where there were tactical calls taken. So if you want to like minimize the impact of downtrends, the best way would be to have a staggered approach in this one. Okay. So there's one question by Vinay. India and EU reach to FTA. As I said, European region continues to be the second largest export partner when I when I rank it after US. So overall, you can see a positive. Like I've not gone through the complete tariff reductions, but in terms of like expectation, there will be positive expectation of this FTA to the healthcare sector. There's one question. What will be the expense ratios? So, in terms of expense ratios, uh, it would like currently the industry average is at 50 bips. So we are going to be again the most cost efficient in terms of the industry average. Uh, Second is this one for the healthcare. Again, we are going to be priced lower than the overall industry average. So both of these passive products, they are going to be less. They are going to be far less than the actively managed infra funds or healthcare funds. And again, they are going to be competitive in terms of like cost competitive in terms of the overall uh, passive funds as well. So there is one question, okay, by Rajesh. It's again related to the European Union mega deal. Yes, as I previously answered, the actual tariff, like the overall circular would come where there will be announcements whether it positively reacts. But again, as I said, the overall contributions may be on the positive side. There is one question by Raminder. What measures and forecasts can we expect from this budget? So, see, overall, when we see from an infra point of view, defense is one of the sector uh, where most outlay is expected because rising geopolitical tensions. There is anticipations that there will be good amount of budgetary allocation that does come under the infra theme. When we talk about on the roadways and the expressway side, it is the second most anticipated sector. So there are again that would come after the actual announcement, but from an expectation point of view, there was private capex that had slowed in the previous years. So government is expected to do like increase the allocations in this budget. So overall, you can have there's expectation of positive contribution on some of the subsectors of the infrastructure sector, I'll say, like defense and roadways being one of the highest beneficiaries on that side. So there is one question by Aditya. What is your outlook on cement sector? Yes, cement does come under infra. So see, for cement, majority of your demand is driven by real estate. Like 70% is driven by real estate and infrastructure growth. So right now there are many schemes that are working in the favor. For instance, there is Pradhan Mantri Awas Yojana. There is bulk of irrigation projects, and there are a lot of road projects announced. So these are expected to positively contribute towards the cement sector. And lastly, if we see the per capita consumption of cement versus the global players, we are somewhere at 300, whereas there is the other major countries, the developed ones, they sit at around 450, 470. So the underpenetration is also one space where that shows that there is room for growth on that side. So you can expect, like again, from the cement side, there is room for growth in the coming time. So as real estate demand picks up, you will see a good impact on the cement sector. So there's one more question with respect to the EU FTA deal. I think the answer for that remains the same. Uh, that like once that narratives are out, that exact policy out, so we'll be coming to out, like we'll come to know that how is it expected to contribute to this overall sector. So forecast point of view from budget, as I said previously, it's defense is expected to have the max allocation, and after that there's infrastructure because private sector had been lagging, so private capex had been lagging. So this may again positively contribute to that. So there's one more question. What are the average return expectations? So again, we can't comment on return expectations as such. But again, from a staggered point of view, you're looking for a long-term theme to bet on. You can definitely look at both of these funds. So there is one question by Manish. Is there any existing MF in these two space? Okay, so existing MF, like there are many AMCs having both of these funds. Like if I speak of Mirae itself, we have a actively managed infra fund, we have a actively managed healthcare fund, and now we are coming out with the passive funds. The expense ratio again, it's going to be like cost competitive. We are going to be lower than the industry average and lower than the other passive funds in the market. So there's one question by Vivek. What percentage of our portfolio we can keep in thematic funds? So see, thematic funds should not exceed more than 10 to 15%. As I said, they are part of your satellite portfolio. So you shouldn't have more than 15% allocation towards thematic funds as a whole. And again, have a diversified approach when you bet on themes. Don't be over concentrated in a specific theme. So since there are no more questions, so what we'll do, we will wind up the call. So just highlighting the NFO details. The NFO for both the funds have started today. They're going to be on till the next week. The allotment would be on on February 6th for both of these funds. Sorry, on February 10th for both of these funds. I'll just take one more question. There's one more question by Shetty Vivek. How can we decide when to enter the fund and when to exit the thematic fund? Okay, see, themes as a nature always are investments that are long term in nature. For example, we as a fund house had launched lithium back in 2012, and you saw that the lithium cycle played somewhere in 2019, 2020. So themes are from their nature itself, they are long term investments. So you need to have a holdings, longer holding horizon, I'll say. Sectorals, again, you can use it for both allocations. You can take it for tactical calls as well as for strategic calls. Okay, so there are a few more questions. I'll just take them. There's one question by Mohammed. Future growth possible of Nifty 50 index. Uh, so I so in terms of Nifty 50 future growth, if you're saying we are currently at 25,000 levels, if you see as of today's closing, we are trading at a PE of 22x. The most important like tailwind, headwind, whatever you say for the markets overall continues to be earnings. So the Q3 earnings is the one big thing that needs to be observed. So if there are earnings that are working for, or like they're having a positive contribution, they are go into like leading again markets rising above the 26, 7,000 levels. But as of now, the one important trigger that everyone needs to follow would be the earnings season, and the second would be the budgetary allocation. Okay. Okay, so there's one question by Murli. How will be the allocation done and what is expected in 2 years? See, the allocation for this particular fund would be done again in a rule-based manner. So this, since it's a passive fund, we don't be taking any active calls at all. So we have an index that's Nifty Infrastructure and Logistics or Healthcare. We'll be simply replicating that. Your portfolio will be taking change, like would be reviewed 2 times in a year, where you will be seeing inclusions and exclusions happening in March and September. Okay, there's one question by Kabir. How is this different from a pharma fund? So see, a pharma fund or a pharma ETF would be only based out of companies on the pharmaceutical space. But when we talk about the this one, the healthcare space, you are having hospitals, medical devices, pharma itself, and healthcare research. So you are getting an diversified play on the healthcare sector, where pharma as a whole, you'll be only exposing yourself to pharmaceutical companies. Okay, there's one more question by Amit. Will the number of stocks limited to 30 or 40? See, for infrastructure, the number of stocks are going to be 100. Again, it's fixed. For healthcare, the number of stocks would be 50. Again, that's fixed. Both would be from large, mid, and small cap. And this rule doesn't change, it remains constant. Whichever company underperforms, that would be reviewed in the semi-annual process and would be excluded out of the portfolio. If there are any more questions, they can be pasted in the chat box, or uh, we'll conclude the call. Okay, so just for everyone's like I'll be repeating it. The NFO for the same for both of these funds has started today. It's going to be on till 6th of February. The allotment for both of these schemes would take place on 10th, and it would be listed on NSE and BSE somewhere close to 12th or 13th February. If you have like any further questions related to them or any of Mirae Assets offering, you can reach out us to our on our social media handles or visit our website for further information. Thank you.